Today in livestock, cattle did retreat some. I think yesterday's close became a real selling signal. We did make that new high, and the market just closed really much more towards the low end, and that just tells us that perhaps the market really wasn't strong enough, or we needed something else to really push it higher. And of course, we would have thought today with the grains having such a pullback that there would be a little bit more support in that live cattle market, but it kind of didn't come. It certainly looks like the futures and the futures premium over the cash might have been just too much, and a kind of a snapping, back into position. And of course, with the feeders been kind of like holding their own on the lower side, that was pulling the live cattle down a little bit much. So yesterday's high was at 125.67, but it didn't hold, and so some liquidations of those 71,000 open longs of the funds had some liquidation there, and it certainly looks like right now that the 120 strike on the options has 8,000 open interest, and it could very possibly be something that's kind of pulling the market just a little bit at least. Now the feeders were steady, so they weren't really lower, so it looks like that all that information was kind of digested already in the market. The futures did settle inside that consolidative channel, and we're well inside the $4 range certainly that we had yesterday. So the worries of slowing demand is already in the market, and really for the time being, and that's why we see more of a consolidative trade for the feeders. That could be just a little indication that the market's kind of taking a breather. Overall, though, the beef complex has really been relatively strong. Now in options, the March 140 strike has the most open interest at 665. And there's actually more, even over 700 on the $7 strike, but it looks like we're starting to move away from those numbers right now. But sometimes you never know that there's more of a possibility, or everyone was really expecting the market to move higher. And perhaps on the next cycle, we're going to see a lot more support in the market. Today, the story in the hogs, they're up again. So the rally support continues to rise, and traders are just buying dips and anything that they can possibly get as a positive, trying to support this market. So the exports are doing well. The April high is got almost to $83. And the deferreds were also firm as well, and it looks like the futures net longs continue to go up. So that just says that the traders are confident to stay long this market. The April pork cutout closed at 88.1 after it had hit a high at 88.9. So there's really a lot more activity in the pork cutout new futures and options. So that's something to be watching as well. And it's really a way to utilize some of the risk management and participate in that lean hog market.